Welcome to Sectors Up Close. I'm Elena Casas. Today we're looking at the year ahead for tech, and my guest is Aaron Anderson, Senior Vice President of Research at Fisher Investments. 2022 was the year the big tech bubble popped. Amazon and Tesla lost almost $1.6 trillion in market cap just between the two of them. And as those stock prices sank, tech workers across Silicon Valley found themselves out of a job. More than 150,000 people were laid off by tech giants, including Meta, Microsoft, Twitter and Snap. Rising rates have been held responsible for a lot of the sell-off in growth stocks. This is global benchmark, the MSCI World Tech Index. It lost 31.28% in 2022. Top constituents here include Apple, Microsoft, Nvidia, card providers Visa and MasterCard, Oracle and Cisco Systems. So, could the sector bounce back in the new year? Let's ask Aaron Anderson, Senior Vice President at Fisher Investments. Aaron, hi. Now, the conventional wisdom, of course, is that the Fed will be forced to raise rates further this year and that that's bad news for tech. But I know you don't think that's necessarily true.
Yeah, hi, Elena. Nice to speak with you here in the new year. You're absolutely right that we do expect the Fed can continue hiking rates, and yet tech can still do well. I think a lot of tech's performance in 2023 will have a lot to do with market performance. What you've seen so far this year is that technology and growth stocks generally have been very sensitive to market direction. And obviously 2022, quite a negative year for US and global equities. Tech underperformed in that type of an environment, but we are expecting a much brighter 2023. And I think tech could be very well positioned to rebound in a more positive equity year like we're expecting.
Specifically then, where do you see the bright spots?
Well, I think there are a number of areas to be optimistic about. I mean, fundamentally, the sector is in very sound shape. As you mentioned, I think a lot of what's affected tech has been market direction, concerns about interest rates and those types of things. But the sector seems very fundamentally sound to us. There are stronger and weaker parts. Areas like cloud and software still are experiencing extremely strong growth. Hardware, semiconductors, that's been a bit more challenged here recently, but I do think that we're in for an upswing as we look towards 2023. So I think there are areas to be optimistic about across the sector. And then you have areas like IT services where in an environment like we're in today, many are fearing recession, of course, in the coming year, but labor markets are still very tight. Wage growth has been very high. That's one of the reasons that people are so concerned about inflation. And usually when you're in that type of an environment, technology is one of the primary areas that companies want to spend on to bring those labor costs down. So things like IT services, things like enhancing productivity, enhancing software, all those areas I think are ripe for investment in the coming year.
So you mean that after the sort of end of the pandemic phase, which saw social media firms and companies that profited from people being stuck at home do so well, we should be looking at different kinds of technology in 2023?
Yeah, well, I do think that there are opportunities there also. I mean, I think especially in the higher quality companies, some of the bigger players in those fast growth areas, things like, streaming, communication services, online video conferencing, all those areas are still expending very stable growth. I think what the market is figuring out is that there are lots of players involved, some higher, some lower quality. I think what you are likely to see this year is investors start separating the wheat from the chaff, so to speak. That they're starting to figure out who the winners are going to be in these areas, whereas in 2021, the market gave lots of different tech-oriented companies credited for being associated with these fast-growing trends. I think 2023 is the year where they start being a little bit more discerning in terms of the companies they think will actually benefit from these trends and those that might be secondary or tertiary players.
You mentioned there that a lot of the winners in this space are still very well capitalized. Are you expecting a wave of M&A in the year to come where they take over smaller companies?
I do think there's a lot of opportunity for that. I mean, companies are still generating very solid cash flows. You said they've got very good balance sheets. Valuations are much more attractive today than they were previously. I mean, I think if you look at the market overall in 2022, we had a bear market. It was a negative year, of course, but not a tremendously negative one. But there's been a real bloodbath in some areas of technology. And so I think there's a real opportunity here for some of the bigger, better capitalized companies to kind of pick through the rubble and find very compelling companies with good technologies that are now much more reasonably priced than they were last year.
And last question, Aaron, why do you think some of these hardware firms that have suffered from shortages, particularly in the semiconductor sector over the last year, haven't been able to capitalise on that better? Will we see that they do in the year to come?
Yeah, I think what we're seeing is that cyclicality, although it's diminished in things like semiconductors, it's not as cyclical as it used to be, just given how many new end markets there are for semiconductors. Whereas previously it was mostly about things like PCs. Now you've got data centers and autos and PCs, and just about everything's got a lot of semiconductors in it today. And so I think that has reduced some of the cyclicality of the industry, but it hasn't gone away entirely. And so I think what we're seeing is a very typical semiconductor cycle here, where you had a lot of constrained supply that was very well publicized. It led to shortages of new auto production, as everybody knows, over the course of the past year or so. A lot of those supply issues have now been relieved. Now you're getting a bit of a downswing in pricing, but I think we're starting to move through that to a brighter pricing picture as we look in the coming year. And so I think what you're seeing with some hardware and semiconductors specifically is just the typical cycle that hasn't gone away entirely, although I think the peaks and valleys probably aren't as extreme as they used to be.
Well, thanks so much for that insight, Aaron Anderson, Senior Vice President at Fisher Investments. And that's your roundup of the Tech Outlook for 2023. I'm Elena Casas, and this is Reuters.